Thank you, Governor, for joining ET Now in this exclusive chat on the rationale of your monetary policy and, of course, much more. I know you've explained the rationale of the monetary policy action, not only in your statement, but also in the post-statement conference. But there is a general sense that the RBI has not really done enough. It hasn't really paid sufficient attention to the growth concerns. And the reason is that, apart from action, timing is very critical in monetary policy. And I'll tell you why I say this, because if you look at your April policy, you clearly said while talking about inflation, and I quote, you said the upside risks appear offset by downside risks, and you give a number of reasons. And in the monetary policy report, which accompanied that, you went even further. You said that, every unit of inflation lowered is going to mean larger output foregone. And the state of the economy is going to weigh very heavily on this choice. Despite that, all the reasons that you gave yesterday could as well have been applicable maybe 6 months earlier. So is there something that, to some logic in saying that the RBI has been behind the curve, you did not act on time, and we are paying the price for that today?
I don't know that you can say that. We have moved whenever we have felt comfortable about inflation. We did not move in April because we were looking for more information on the rains, the disruption in rains that had happened. We were also looking for more certainty on the monsoon, which we didn't get. In fact, after our policy yesterday, we did get more information, which was negative rather than positive.
That could still change, of course.
That could still change, of course. We were looking for information on the normalization of monetary policy. We were looking for information on the state of the economy. I think if we take all the information we've got since April, in general it would say that we're not more comfortable on inflation than we were in April. Despite the fact, I think the positive has been the disruptions. The weather disruptions didn't result in higher food prices in April. However, what we did learn was the state of the economy is probably weaker than we thought because of the poor corporate results, which gave us some room to cut interest rates, in the policy yesterday. But we used all the room we had. There are some people who say, "Oh, you were saying it's equally balanced around, 6 in April. How did you cut interest rates today?" Well, we used up the room, and we still are saying now we've moved a little from being equally balanced to having some upside risk in inflation forecasts for the beginning of next year. We have always used the room we've had. We've never had excess room. When people look at today's inflation reading, 4.87, they simply choose to ignore because of they don't understand the fact that what you're trying to do is look at future inflation. Now that's an art, not a science.
Absolutely.
You can dispute RBI's models, RBI's assessments, but we are trying to use whatever room we have given our assessments. If you have a better model of inflation forecasting, bring it forward. For people who say that we missed the big reduction in oil prices last year, which contributed to inflation falling below our forecasts, tell me one forecaster who got it right. And also find any forecaster who thought there was any chance of us reaching 6% by January 2016.
Sure. But then, I think by about November, the writing was fairly on the wall. And if you look at
November is when OPEC took its decision. It was not on the wall in November. It was after OPEC decided to stay that you saw the precipitous fall in oil prices. We cut in January as soon as we were sure. Remember, we were also changing the inflation index numbers. We were also coming into a new year when we'd see the base effects. It would be irresponsible not to wait a few weeks. Now, if you think a few weeks make a big difference in growth, I think you're working with a different economy than I am.
Except that, you said that you use the room that you have at that particular point of time.
Which is why we went ahead.
Yeah, but central banking is about, using the room that you think is likely to be available.
We did not think there was room available. As and when, remember, every one of our forecasts is saying we've used up all the room, it's equally balanced. We've never come up with a forecast which says we're going to be substantially below 6%. right?
That's true, but do you need to be below 6%? Because even now, your target, you say you're going to reach 6% by January next year, and that's what it is. So why is there this need to be a little extra cautious on inflation? And that brings me to my next question about being data dependent.
Yeah.
You know, I know all central banks are data dependent, including the Fed, which doesn't know whether the US economy is growing or contracting. You have a much more tougher task on hands. But given the fact that data A comes with a lag, B is very often unreliable, and we have long transmission gaps, is this dependent on, no, I suggest discretion. Data dependent.
So go on sentiment, go on intuition.
Not intuition, but based on institutional knowledge, based on, you know, a little bit more discretion. If you look at the US Fed, it has far more discretion. It uses its discretion wisely, unwisely, only one can, you know.
I think if you look at the US Fed, that we give all this great thing, their statements have been changing repeatedly.
Which is why I think you should also, whereas Governor, you've been very consistent.
Well,
Consistency is
look
not
at
a
the
great
commentary in
virtue.
the papers today. Look at the commentary. I mean, I think you might, look, I think you'll find all kinds of people saying all kinds of things. Some people say we are consistent. Some people say we do what we say. Other people say we're totally confused. They're confused. You get all kinds of...
That, of course, that I will grant.
Let me tell you exactly what we're trying to do. We are trying to operate with an economy which has an inflationary bias, which has had substantially higher inflation than the rest of the world, which is moving to a new framework which is trying to put this inflationary bias behind it. We are trying to ensure that given this kind of economy, we bring inflation down such that we can have finally lower nominal interest rates which can result in many years of strong growth. We did this once. It was under Dr. Rangarajan's time. When we created, I think, the RBI created then the environment for 8-9 years of strong, sustained growth before we let the inflation genie out of the bag again. And we let it out because, again, we stopped paying attention to the underlying inflationary forces and chose to respond to people who said, oh, cut interest rates, growth is low, etc., etc., when growth was already substantially stronger than we anticipated. Of course, at that time, again, we had a lot of confusion about the numbers, growth numbers. The first estimates of growth came in very weak. I'm talking about the period 2008, 9, 10. Growth estimates came in very weak. We thought there was need for a lot of stimulus. We stimulated, found we had overstimulated. So the point is we have to do the best job we can in a very noisy world. We are trying to use all the room we have, keeping in mind that our inflation objective, which has been given to us by the government, is something that it would be silly to miss on just the first go. It would imply a tremendous loss of credibility, but we're not trying to be overly conservative. We're not trying to undershoot that substantially. We're trying to hit it on the nose, thereby giving as much room. There would be people, a few I admit, who say we have been excessively aggressive this time by cutting interest rates once more.
Well, you know, given the fact that, as you mentioned, that yes, inflation has become your primary objective, it should be a primary objective when inflation rates are high. But when inflation is trending down and globally you have deflation rather than inflation being a worry, is there a case for, you know, juggling these two between growth and shifting a little bit more to growth? The process of inflation targeting, has it made the Reserve Bank blind to everything else?
No, I don't think so. I think across the world, whether you call it inflation targeting, a focus on inflation, which was the Reserve Bank's focus earlier. I mean, I think the primary lesson from economics is bring inflation down, ensure that people feel comfortable with low levels of inflation, and then you can bring nominal interest rates down as low as possible. Today we have a situation where, compared to the rest of the world, which you point out, the rest of the world is in deflation. We have very high inflation. And as a result, we can't bring nominal interest rates down when people keep complaining, oh, US interest rates are at, quarter percentage points and you are at 7 1/4. Isn't that a terrible thing? I say, yes, but look at the inflation differentials. And we absolutely have to bring down inflation for sustainable growth.
In October, you said that the inflation in the first quarter of the next year would be 8%. Actually, we hit 5%.
Because oil prices collapsed.
So many things you cannot say.
Absolutely.
So in that context, should you be a little less hawkish if it helps growth?
I am not hawkish. I am pointing out the risks. And I said, if the risks do not materialize, we will have more room. If we have a normal monsoon, obviously we'll have more room. If oil prices fall, we will have more room.
Because given monetary transition in India...
You are asking me to
We look ahead. I'm asking you for a third Divya Drishti, BJP language, Divya Drishti, but that's what we expect of our governors.
No, but no governor has that, let me assure you.
Of course, he doesn't.
And it would be irresponsible to target monetary policy at an overly optimistic situation, right? We are targeting monetary policy at our expectation of what the situation will be and pointing out what the risks are. Now, going forward, if the environment is much better than we estimated, we will have more room. That's exactly what we said. And if the environment is worse than we expected, we will have less room. We are trying to say our best estimate of the room we have is thus and such. And I do have some discretion. I use whatever discretion I have over and above the models by saying, okay, my sense is we probably have a little more room than our models suggest. Therefore, I'm going to go ahead with a rate cut. However, I can't go too far from that unless I junk the models. And then I'm back driving by the seat of my pants, which is what we don't want monetary policy to do.
Now let me shift to another aspect of monetary policy, which is very, basically credit. And in this prospect of the RBI's monetary policy, particularly after the monetary policy framework agreement, even though it was formally signed only this year, actually in practice RBI has been, implementing it for about a year. So in this process, there are two things that are concerned. One is the cost of credit and the other is the availability of credit. On cost of credit, why is it that RBI is not willing to accept what practicing commercial bankers tell them, that the marginal cost of funding cannot be the basis for the base rate? Because the Indian banking system is quite different from that abroad. The bulk of their lending comes from deposits, which are at fixed rates of interest, not even floating like on your loan side. In such a scenario, it cannot, cutting your repo rate, asking them to kind of base it on the marginal cost of funds just doesn't work. We're not Northern Rock.
Banks are financed by term deposits. None of the deposits are floating rate. How do they manage it? Well, they use interest rate derivatives. If I'm making a loan based on a floating rate, but I have fixed rate deposits, I have to convert the fixed rate deposits effectively into floating rate. I do that through derivatives. Banks are tremendous users of interest rate derivatives in order to do precisely what you're saying. We're not unique, and that's why you're continuously saying India is sui generis, and this is what gets us into trouble. Because if India always thinks of it as unique and different because our ground realities are different, I get this thrown at me all the time. In actual fact, we've resisted doing the good things elsewhere because we say we're unique, we're different, etc. But if we make the changes, we adapt. If the banks are making floating rate loans and they have fixed rate deposits, one way to do it is through what we do right now, a base rate based on average cost, which allows them to resist changing. But I'm telling them they can't have that luxury for too long, because increasingly their clients are going directly to the market. See how much commercial paper has been issued in the last few months. That their clients are bypassing the banks because they find it cheaper to go directly.
Also because banks don't wish to lend. I think it's a bit of both.
It's a bit of both, but let's come to that in a second. Banks are certainly a little more risk averse given the capital, etc. You see their excess investment in government securities, where they're getting 7.667, 7.7 today. Sure. That's a low interest rate, and they're still willing to lend to that, put their money there, which is telling me that they're a little risk averse at this point. But the point really is that this notion that because I have fixed deposits, I can't lend floating and I can't adjust floating, that's not, it's true elsewhere in the world, and they've managed to do it. And they do it because they have to compete with the markets, and they compete with the markets by converting their fixed to floating by interest rate derivatives. It's something they have to learn to do. It's something they're not doing right now, you're absolutely right. But they have to move. And some of the foreign banks are already doing it, some of the domestic banks are doing it.
Because foreign banks are much more dependent on wholesale
But some of the domestic banks are also doing more of it. Some domestic banks are already at marginal cost of funding.
Talking about availability, one of the reasons why banks are not making credit available is because of the high levels of NPAs. And it's very, quote unquote, convenient to blame the banks. Yes, banks are responsible partly, but I would hold two other parties, the Reserve Bank of India as well as the Government of India, responsible. The Reserve Bank of India, because at the macro level you held monetary policy. I'm not talking about you, I'm talking about RBI as an institution. held interest rates, monetary policy easy for far too long earlier. So at the macro level, there's too much money available, so banks lend. Not on the scale of the subprime crisis, but maybe they lend. At the micro level, RBI has nominees on the bank boards. RBI has a very powerful voice in the selection of the bank chairman. RBI also does inspection. So these NPAs, it should have seen them at the time of before the crisis. RBI relaxed the exposure norms for infrastructure large projects. That is RBI's responsibility, quote unquote. Government of India, because the government kept telling the public sector banks, lend to infrastructure, lend to infrastructure. And if India did not have such a bad time after the global crisis, it was because public sector banks lend. So today the onus of responsibility must be shared by public sector banks, not the private ones. They were smart enough not to listen to RBI, not to listen to Government of India. So public sector banks, RBI as well as Government of India. But the onus is entirely on the public sector banks. Now, given this kind of scenario and the fact that if, insistence on pristine balance sheets, quote unquote again, might be a little counterproductive. Is there a case for being a little bit more nuanced in your approach, if only to get banks lending? Again, long question.
Again, it's I mean, you want your cake and you want to eat it too.
Of course.
Look, you're saying on the one hand we were too lenient, we pushed them towards, we changed exposure norms, etc. Now you're saying you're being too, you want them to clean up. That's a bad thing. Let them go on for a little while, etc., etc.
Some more.
We gave them 6 years of forbearance. Since 2009, they've been allowed to restructure loans. How much more is it going to be?
The US has kept interest rates as near zero for 6 years.
It's a different issue. The US forced their banks to clean up very quickly.
At taxpayer expense, Governor.
Where do you think the losses are coming from in the public sector banks? It is at taxpayer expense. Look, we can go on the blame game for a long time. And
I'm not, get out of this situation?
I'm not in any way saying that the public sector banks are primarily or wholly responsible. There is enough blame to spread around, including the promoters, how they bid, including the mood in 2007, which was that we've just built all these power plants, wonderful, they're functioning, great, let's now finance a whole new set of power plants, but with much less equity and so on. I mean, look, optimism, you don't need to go to darker explanations. There was excessive optimism. That's when leverage builds up. Whole lot of reasons why this built up. Going forward, let us see what we need to do. We need to clean up. The lesson of every financial crisis is the longer you wait to clean up, the worse the problem becomes. And our sense is when you can extend and pretend and you assume it's functioning, it's not functioning. But you put it behind this thing. Now you focus on other things. And what happens is the project is stuck, it's not going, but you've got a 2-year moratorium. Let's not even think about lending again to that. That guy doesn't have money to finish the project. But you're not lending to him because he's stuck. And you say, okay, for 2 years, and maybe the next CEO will have to deal with it. I don't worry about it. So I extend and pretend and keep it going so long as it doesn't show on my books. That is in nobody's interest, not in the promoter's interest, not in the taxpayer's interest, not in the bank's interest. Can we get them to recognize the problem, set the project back on track so it's producing value, it's producing power that somebody can buy, and even if it is now worth 60% of what you thought it was worth, all you're doing is the accounting. You're saying, I thought it was worth 100, it's worth 60, the market already knows it's worth 60 because it's downgraded the value of my books. I need some capital to absorb that hit. Let me absorb that capital. But once I recognize it's 60, maybe I can make a new loan to the guy so that he can finish it, or maybe I can get in a new promoter who is much more competent at running it than the old guy. So can we make those real changes to get things back on track?
Now you're more than halfway through your tenure as governor. When you took office on the 4th of September, you had an ambitious wish list. Very quickly, how far have you achieved them? Which have been your singular successes and which have been areas where you feel that you really haven't been able to make sufficient headway?
I think it's too early to say success. I think there are many areas we've made progress in. We've moved forward. I mean, immediately at that point, it was a very volatile currency. We brought stability. I think people have far more confidence in our ability to deal with volatility, especially given the level of our reserves now. I think there's a much better sense of what macro policy, especially on inflation, is, despite back and forth what we're trying to do. I think if you ask outside commentators, if you ask economists here, there's a clear sense of what RBI's mandate and focus is. We've tried to clean up the banking system, telling them here, if you want flexibility in dealing with the problem, we'll give you flexibility. But if you're saying, let me postpone dealing with the problem, we're not going to be happy about that. So I think banks have a clear sense of what we're trying to do there, and whenever they come to us with, here's a difficulty, we examine that. Okay. Sometimes when we think that, they really, it's about not recognizing rather than recognizing a problem, we are less sympathetic. But when there's a genuine difficulty, we help them with it. We made a fair amount of progress on it. I am hopeful these new licenses will be a sea change in the nature of the banking system. We are working with the government on governance in the public sector banks. The government has split up the position.
You spoke about selection of public sector banks, but then bank chairman, at least the names that are floating around, we have 2 ex-bureaucrats. So I'm not very sure that one has really made very much progress. If you're going to get ex-bureaucrats as chairman,
I think it's a first. I mean, don't dismiss the possibility that there could be very good ex-bureaucrats also.
Of course, but that is not the
whole point is, what is the process of selection, and does the selection look at different kinds of potential people to get the best people? You don't want to rule out bureaucrats because they've been there in the past.
Not as bank heads.
You want people who have expertise in
administration, Governor, not in running a bank in today's days.
No, but remember, the person running the bank is the CMD.
That's true.
The chairman is meant to make sure that the board takes appropriate decisions. There have been very good chairmen of tech companies who have been bankers, and one could visualize a tech company chairman being a very good bank chairman.
So the names would suggest.
It's really managing the whole process of board discussion and so on with some knowledge of finance. You can't be a complete novice. You can't be a. And I think hopefully the set of people will be. But remember, it's a process.
That's true.
People are scared of what awaits them in this new world.
Absolutely.
And so you're not going to get a whole lot of people jumping in saying, I want to be first here. But as people see the world has changed, more and more people will be willing to come in, and you will find a larger and larger group of people willing to be willing to.
One last question, Governor. You know, when you came in, I think you could do no wrong. And now if you look at the commentary, you look at the way stock markets have reacted, you're now seen as more fallible, again, quote unquote. Now, is it like with the Modi government, the expectations were too high and now expectations are being recalibrated more realistically? Because there are limits to what any central bank governor can do. And does this burden of reduced expectations, does that make life easier for you?
No, look, I think people very quickly take for granted whatever addition you were bringing in, and they'll look for increment, right? I mean, take yesterday's rate cut. People started taking the rate cut for granted and now are looking for.
That's because you reacted late, Governor, not because of anything else.
No. I think a fair number of people wanted 50, 75, 100. The people who are talking, anyway, the point really is people take for granted, if we don't advertise what we're going to do very clearly, give guidance and do what we said we would do, people say you didn't tell us. And then when we don't do more, then what they said, oh, you've fallen below expectations because expectations run ahead. But I am, in many ways, I think, an older kind of central banker who believes the job of the central bank is not to, in the words of yesterday's press conference, be a cheerleader, but to create the kind of environment where strong, sustainable growth can be had. When people say you should be increasing sentiment, that is not my job. That is absolutely not my job. My job is to tell the future as I see it, not mislead the public, not give false expectations if I don't see them there, but within that, to do the best job I can in balancing inflation and growth given the mandate I have. Now, that's what we're trying to do. people need to understand that. The job of the central banker is not to be a rock star or to be a booster, as somebody else put it, but to create an environment of trust about the currency. I mean, that's in our mandate. The RBI is about maintaining the value of the rupee.
Sure, sure. I do hope you succeed, Governor. Trust in currency as well as growth. Thank you so much. It's been great talking to you. Thank you so much.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.